Hello and welcome. Today we are diving deep into one of the UK's most powerful investment tools, something that often flies under the radar, the Enterprise Investment Scheme, or EIS for short. If you're looking for a way to really slash your tax bill while backing some of the UK's most exciting businesses, this is one you need to know about.
So, let's picture this. You've had an amazing year, business is booming, and then that dreaded letter from HMRC arrives. Oof, a hefty tax bill can seriously feel like a punishment for your success. But what if you could flip that on its head? What if you could turn that tax liability into an incredible opportunity? That's exactly what we're talking about today.
And before we jump in, a quick shout out. This deep dive has been brought to you by the fantastic team at My Tax Accountant. They are the experts in this field, helping investors like you navigate this stuff. And they've given us the insights to make this explainer super clear and practical.
Right, here's our roadmap for today. First, we'll look at why EIS is an investor's secret weapon. Then, the really good part, your 5 tax superpowers. After that, we'll cover the all-important rules of the game, explore the financial safety net it provides, and then walk through exactly how you claim your relief. And finally, we'll talk about your next steps. Let's get into it.
You know, to really make this stick, let's follow a story. I want you to meet Anya. She's a freelance graphic designer based in London. She's absolutely smashed it this year, but now she's staring down the barrel of a pretty big tax bill. Anya's journey is going to help us see exactly how EIS works in the real world.
So what even is the Enterprise Investment Scheme? Well, it's not some new fad. The UK government actually launched it way back in 1994. The goal was, and still is, pretty simple. To get people to invest in smaller, high-risk companies, the ones that are really driving innovation. To make that risk worthwhile, the government offers some seriously generous tax breaks.
Honestly, the best way to think about it is that the government is basically your co-investor. By giving you a big chunk of your investment back in tax relief, they're lowering your risk and helping you fund the next wave of innovators and job creators here in the UK. Pretty cool, right?
Okay, now we're getting to the part you've been waiting for, the benefits. And these aren't just little perks. These are what we're calling your tax superpowers. For someone like Anya, this is where EIS goes from being a nice idea to an absolute game changer. And for you too.
So here they are, the Fantastic 5. You get a massive chunk of income tax relief up front. Any profit you make is exempt from capital gains tax. You can defer other capital gains. There's potential inheritance tax relief. And maybe most importantly, you get loss relief if things don't go to plan. Let's break down the biggest ones.
Let's start with the big one, the headline act, 30%. That's how much you can claim back on your investment against your income tax bill. It's a direct, straight-up reduction. Just take a second to let that number sink in. 30%. It's huge.
Let's go back to Anya. So she decides to invest £10,000 in a cool new tech startup that qualifies for EIS. When she does her taxes, she can literally just knock £3,000 off her final income tax bill. Just like that. Her £10,000 investment has really only cost her $7,000. It's an incredible immediate return.
And here's a pro tip. It gets even better. This feature is called carryback. So let's say Anya's income was actually much higher last year. She can choose to apply this year's investment against last year's tax bill. And if she's already paid that tax, HMRC will actually send her a refund check. That flexibility is just fantastic.
Now the benefits don't stop there. What if the company does really well? With a normal investment, any profit you make is hit with capital gains tax. But with the EIS, as long as you hold the shares for at least 3 years, any growth is 100% tax-free. No tax on the profit whatsoever. That can make a colossal difference to your final return.
Now, of course, benefits this good have to come with some rules. The government wants to make sure this is all being done correctly. So there are some really important conditions that both you, the investor, and the company you invest in have to meet. Getting these right is absolutely crucial.
So what about the rules for you? Well, first off, you have to be a UK taxpayer. You generally can't already be an employee of the company. You can't own more than 30% of it. And this is a big one. You have to hold on to those shares for at least 3 years to keep all those lovely tax breaks. The annual limit is pretty generous, though. You can invest up to £1 million a year or even $2 million for certain high-tech businesses.
The company has to play by the rules too. It needs to be a smaller, unlisted business with a UK base. It has to have fewer than 250 employees and less than 15 million in assets. Basically, all these rules are there to make sure the money is going exactly where it's intended, to fuel the growth of young, innovative UK companies.
Okay, let's talk about the elephant in the room.
What happens if it all goes wrong? These are high-risk investments after all. Not all of them will succeed. This is where EIS really shines, because it has an incredible financial safety net built right in. Let's see how it protects Anya if her investment doesn't work out.
First things first, we need to figure out how much money you actually have at risk. It's not the full amount you put in. You start with your initial investment. Let's use Anya's $10,000. Right away, you subtract the $3,000 in tax relief she got back. That means her effective cost, the real amount of her own money on the line, is only $7,000. Her risk was just cut by 30% from day one.
This table really brings that safety net to life. Look at this example with £100,000. Your net cost after the initial 30% relief is $70,000. Now, worst case, the investment goes to zero. You can then claim loss relief on that $70,000. If you're a 45% taxpayer, that's another $31,500 back from HMRC. So your $100,000 investment only results in a final real-world loss of $38,500. It turns a 100% loss into a much more manageable 38.5% loss. That is truly powerful.
So we've seen all these amazing benefits, but how do you actually turn them into reality? How do you claim them? Well, the process is probably more straightforward than you'd think, but you've got to get the paperwork right.
It really just boils down to 3 steps. Step 1, you make your investment. Step 2, the company sends you a critical document called an EIS-3 certificate. Think of this as your golden ticket. It's the official proof. And step 3, you just use the info from that form to fill out your self-assessment tax return. And that's it. That's how you make the claim. And don't worry, you don't have to rush. The government gives you a really generous window to make your claim. You actually have up to 5 years from the January after the tax year you invested in. This is great because sometimes it can take a little while for those EIS-3 certificates to be issued.
Phew! We have covered a lot of ground today. We've talked about what EIS is, the amazing tax superpowers it gives you, the rules you need to follow, and that all-important safety net. So, what do you do with all this information now? Let's talk about some clear next steps.
So, to wrap it all up, the Enterprise Investment Scheme is an incredibly powerful tool. It can slash your tax bill, protect your capital if things go south, and deliver completely tax-free growth. But, and this is a big but, the rules are strict. Getting it wrong can mean you lose out on everything. This is one of those areas where getting expert guidance is not just a nice-to-have, it's essential.
So, if you're thinking that this could be a great strategy for you, just like it was for Anya, your best next step is to talk to an expert. The team at My Tax Accountant live and breathe this stuff, and they're ready to help you get it right. You can reach them on WhatsApp or give them a call on 07854 255 375. Or you can just pop them an email at info@mytaxaccountant.co.uk. And for more expert explainers just like this one, make sure you hit subscribe on their YouTube channel. Thanks so much for watching.